A stock can break through resistance and look like a strong buy signal, but without volume behind it, that move is suspect. Volume is what separates real moves from fake ones. Today, we break down exactly what volume is, why it matters, and how to use it before you enter any trade.
Volume is the total number of shares bought and sold during a specific time period. If 1 million shares of a stock changed hands today, that stock's volume is 1 million. Why does this matter? Volume tells you how much genuine interest there is in a stock. High volume means a lot of buyers and sellers are actively participating. Low volume means very few people are interested. When price moves on high volume, that move is more likely to be real. When price moves on low volume, be cautious. That move can reverse quickly with very little effort. I have seen stocks run with little to no volume, but consistently increasing volume tells you that interest in the stock is genuinely growing. That is the signal worth watching.
Before entering any trade, always check the average daily volume. This is about something called liquidity. Liquidity means how easily you can buy or sell a stock without significantly moving the price against yourself. High liquidity means lots of buyers and sellers. You can enter and exit cleanly. Low liquidity means very few participants. Your own order could move the price against you before it even fills. A simple rule for beginners. If the average daily volume is under 500,000 shares, be very careful. Low volume stocks are harder to exit quickly when a trade goes wrong. And in trading, you always need a clean exit.
Here is a real example of volume doing exactly what it should. AIXI. Before the stock ran 164%, the volume was building quietly. That building volume was the signal that smart money was accumulating shares. Interest was growing before the price reflected it. The chart and volume together told the story before the move happened. This is what you are looking for. Price holding support while volume gradually increases. That is accumulation. Smart money building a position quietly before the move begins. When the move finally happens on high volume, that confirms the breakout is real.
If this free education is helping, hit like, share, and subscribe right now. Follow Alpha Breakout Lab for free trading education every week. Now let me show you a more advanced volume pattern, the bag holder shakeout. A bag holder is a trader holding a losing position and hoping it recovers instead of cutting the loss. A shakeout happens when weak holders are forced out of their positions before a real move begins. Here is what it looks like. A stock declines slowly over weeks on low volume. The weak holders, the bag holders, gradually sell in frustration. Volume dries up as the selling exhausts itself. Then a catalyst hits, earnings, news, a contract announcement, and the stock explodes on massive volume because there are very few sellers left. SNAL Incorporated is a very recent example. The stock ran lower for weeks, shaking out weak holders. Then strong earnings hit and the stock ran significantly in a single day on enormous volume. Important honest warning. SNAL is a microcap stock. Microcap means a very small company, usually under $300 million in market value. These stocks are extremely high risk. They can drop just as violently as they spike. Liquidity is low, which means exits can be difficult. Do not trade microcap stocks until you have real trading experience behind you. This example is for education only, not a recommendation to buy or trade SNAL or any similar stock.
Here is the honest summary on volume. High volume on a breakout. That move is more likely to be real. Low volume on a breakout. Be cautious. It can fail quickly. Volume building quietly on a stock holding support. Smart money may be accumulating. Volume explosion after a long low volume decline. Potential shakeout setup. But volume is not a guarantee. It is one piece of the puzzle. Always combine volume with support and resistance levels and the overall chart pattern before making any trading decision. And always check liquidity before entering any position. If average daily volume is too low, find a different trade.
That is volume, one of the most important tools in technical analysis. Part 3 drops next week, moving averages and how to use them. Like this video if it helped. Subscribe so you do not miss Part 3. Follow Alpha Breakout Lab for free stock alerts every week. Builders do not sleep until the dream is real.